Hi, and welcome to the Stock Scores Market Minutes for February 12th, 2018. This week's topic, when support works. Support is a floor price on the chart. Typically, it's drawn as a horizontal line at past lows, at places where stock price stopped going down and started going up. The market has established a barrier, which we call support. We can also draw trend lines of support across rising bottoms. So if we have an upward trend, we can draw a trend line across those bottoms, and that defines trend line support. When prices fall into support, they typically will hold at that level and bounce. When prices trade with narrow volatility at support and then break below, that is what often leads to lower prices. Now, in this week, we saw a big pullback in the market. I'm going to show you how trend line of support worked to give the market a base. But before we do that, let's look at the 30-day, 60-minute chart of the S&P 500 ETF. And you can see that we broke our upward trend line. We talked about that. Then we broke through this support level, and that led to the precipitous decline in the market. Right now, we have a downward trend line that looks something like that on the very short term. We have not yet broken it. We've run away, we've come back, we've run away, and late on Friday, we're starting to come back. But until we can break this short-term downward trend line on the hourly chart, I wouldn't get too optimistic. What I expect will happen next week is we've got a shoulder ahead. We now need to build a second shoulder on the right side and then try to break that downward trend line. Now, this is where we see how trend line of support held up. This is the weekly trend line, and you can see I haven't drawn it perfectly, but you get the idea. I try to draw a little better here. Just drawing across those lows. Now, we went through it on Friday, just barely, but we held that level. We fell quite sharply, and keep in mind that this is a weekly chart, so there's 10 days of trading in those red zones there, the two red candles. So in 10 days, we fell quite sharply. We touched that support line late this week on Friday. We managed to come back and close above the trend line. And that is what I'm talking about. When prices fall into support levels, whether it be horizontal or at trend lines of support, they usually bounce. And that's exactly what happened on the S&P 500. Moving along to the Russell 2000 IWM, similar situation. We've got an upward trend line, and that trend line has held. That means the buyers are still in control of the market in the long term. Now, in the short term, we can see that the sellers are in control. This is the hourly chart of the TSX, and we've had a parabolic move to the downside. We ran away from the trend. We came back to it. We've run away. Now we're trying to come back to it. Will the market be able to break up through that trend line, perhaps after building a rising bottom early next week? That's what you want to watch for. So if the long-term trend line on the weekly chart is broken, be a bear. If we can manage to get back above this short-term trend line, then we're probably going to get a little recovery bounce in the market, and that's what you want to watch for very closely next week. Longer-term chart of the TSX shows that the upward trend line on the Toronto Stock Exchange has been broken, and therefore we are now into a sideways trading range in between these two barriers, and I expect the Toronto Stock Exchange to go sideways and really continue to do what it has been doing for some time, and that is underperform the US market. On the TSX Venture, we had that big jump here, mostly because of cannabis stocks and the approvals in Canada for the legalization of cannabis. We popped up, the news was out, the profit takers came in, and we've come right back down to support. Now, we did manage to close this week above the open, so perhaps we'll get a bounce there, but I think it's going to take some time for the market to reconcile those things. Now, keep in mind, the TSX Venture is a alpha market where there's lots of individual stories that catch the interest. It's not so much a market driven by what the index is doing. So we could still have strength in another area, perhaps in mining or oil and gas or something like that, even though the overall market might go sideways for a little while. Onto the Treasury bonds, which many people are saying was the culprit for the sell-off. I don't know if I agree with that. I just think that the market was overbought and needed to have some profit taking. Any excuse to take profits would do it. In this case, it was the rising interest rates, which are shown by a drop in prices in the treasury bonds. So again, if the bond market goes down, interest rates go up. We have now come down to horizontal support where the market should bounce. We could go down a little farther before we truly hit it, but I expect Treasury's downward slide to end in the next week, perhaps 2 weeks, bounce back, and we'll then see if we can ultimately break through that long-term support level. US dollar was quite oversold. What does it mean to be oversold? Very simply, if your trend line is drawn and you run down and away from the trend line, then you're oversold and we expect it to come back. So again, we've run down and away from the trend line. We now expect the US dollar to come back up to the trend line. So I think we could still have maybe a few weeks of strength until we get to the resistance at that downward trend line. But until that downward trend line is broken, we should remain bearish of the US dollar. Short term, I think it's very possible that we'll see a couple weeks, perhaps only a week of strength, but longer term we need to break that downward trend line for the trend to reverse. On to gold, which doesn't really benefit when the US dollar is climbing, and the US dollar had a good week, and so we see gold had a bit of a bad week. But in the big picture, gold is building an optimistic pattern. This is called an ascending triangle pattern, very long term here, going back to January of 2016, where we've got condensing or compressing volatility. There's a lot more volatility in gold over here than we are seeing over here. What that compression and volatility means is that buyers and sellers are coming to some agreement about what gold is worth. And there's optimism because we have rising bottoms in that pattern. That is a sign that the sellers are losing strength, the buyers are gaining strength. If gold can break through 130 on the GLD on a weekly chart, then I think gold could actually go for a run. A lot of that is going to depend upon what happens with the US dollar. I don't think gold's going to break out in the next week or two because I think that the US dollar is going to rebound a little bit, but perhaps looking out later this year, we could see gold make a breakout if the US dollar continues to weaken. And the strength in the US dollar probably contributed somewhat to the weakness in oil this week. You can see we had a pretty strong week to the downside. In the context of the upward trend line, still intact. We ran away from it. We're coming back. Let's see if we get a bounce off of that trend line next week. But I think it's appropriate to have a little bit of caution because there was some pretty harsh selling in some of the oil names this past week. Will that change if oil can bounce? That's what we need to take a look and watch for. And finally, the fear chart, the VXX. This shows us how people are protecting themselves with insurance through the futures market, through the options market. This is primarily, well, this is only, of course, the futures market on the S&P 500 futures. But when you get a real big run up in this, it implies that there is fear in the market. Now, we still have rising bottoms. We've hit resistance and got stuck there. Until we can break through this, I think that the fear will start to dissipate. This has a history of coming alive for a short while and then calming down. It hasn't calmed down enough yet to make me think that the worst is over until we can maybe get a break of that upward trend line on the VIX. I wouldn't get too cocky with being a buyer, but certainly it does seem to be having some difficulty. So my ratings then, long term, I'm still bullish on the US stock market because the upward trend has held, but certainly it is in a zone where caution is warranted, and therefore not a surprise that we have a bearish rating short term, as we've had some pretty strong selling the last week or two. Canadian stocks, I'm lowering to neutral long term because it has broken that upward trend line. Bearish short term, of course, with the selling pressure, we are in a downward trend short term. Gold neutral, stuck under resistance long term. Neutral, it's more or less been going sideways for the last month. Oil neutral long term. It hasn't broken the upward trend line, but certainly doesn't look great. And the short-term trend has been bearish because we've had some pretty decent selling in that area. So strong selling pressure has taken the US stock market to the 3-year weekly trend line, which has held so far. There's a good chance the market will bounce back near term simply because we have fallen sharply into that support zone rather than consolidated with low volatility at support, in which case we would expect a breakdown. The upward trend on Canadian stocks has been broken, so the Canadian market not looking as good as the US market, and I could have said that any time in the last 2 years, I would say. Gold is stuck under resistance while the upward trend in oil is being tested and fear is high, and that means sometimes investors will get a little emotional. Well, here's my trade of the week on VXX. This is a swing trade, and I first noticed the action candle. Any of these pink dots that you see here are action candles. They represent abnormal buying pressure in the market. And we had the first one on January 30th. Now, if you read my weekly newsletter, and everyone should because it's free, just go to stockscores.com. You can register for the weekly newsletter there for free. I featured the VXX as a way to profit from a pullback. It took a few days before it started, but we had our second signal there. Again, that action candle this time breaking this downward trend line, this action candle breaking through this resistance level right. I got a fat finger today. Right there. And then this one being broken here. And you see the bottom slowly rising. The trend went parabolic. I exited my bearish market trades, in other words, trades that benefited from the market going down, not only in the VXX, but also in something like the SDS here, because the trend went parabolic and it was starting to move down from its open. So I got out right around in there. And we haven't gone higher than that, although we are still building some optimism in the VXX. Now, right at the end of the day on Friday, we did break that little upward trend on this time frame anyway. It doesn't look so good on the longer term hourly time frame as we showed earlier. So I think that we could see that VIX pull back with the market bouncing next week, but by no means is the market out of the woods. We need to see a little bit more buying pressure come in next week. The great thing though here is just following the action candles. There's your action candles showing you that the buyers were coming into the VXX before it really went parabolic. And that's why this is the trade of the week. Well, I hope that you've enjoyed this week's Market Minutes. Subscribe to the channel, like the video, comment if you care to, and most importantly, have a great week in the market and trade well.